Hello, Tiernorts, and welcome to this daily market commentary for Wednesday, the 4th of September. 4th of September already. Welcome to a new month. Apologies for the lack of commentary yesterday, but all good today. Some minor technical hitches. Welcome to a new month with very similar market drivers as we saw in August. Brexit and US-China trade wars will once again take center stage, and we already have had some fireworks with new, although expected tariffs from the US coming into effect on Sunday. In Hong Kong, however, it's been reported that leader Carrie Lam will withdraw the extradition bill that originally sparked the mass protests there. And back in my homeland in the UK, Boris Johnson, the Prime Minister, has seen a de facto walk across the floor of the Houses of Parliament to join the Liberal Democrats, and also has had 21 of his senior colleagues vote against allowing a no-deal Brexit, which has seen their immediate expulsion from the Conservative Party. So some fairly unprecedented behaviour going on back home, should I say. As such, he no longer has a working majority and is essentially calling for a general election prior to the looming Brexit date of October 31st, although it would appear now that he may have to ask for an extension on that particular date. Sterling had dipped as low as 119.60 with all the uncertainty, although it has bounced up at the beginning of the USD to 121.70, so a good 200 points off the lows. Crypto markets had a bright start to the week. Bitcoin has rallied from 9,400 area up to just shy of 10,800. And Ether has also managed to rally, getting a boost from 164 to a high near 183 at one point. Catalyst for the euphoria appears to be the launch of a what is being referred to as a Bitcoin limited ETF by SolidX and Van Eck that is not technically an ETF, which I'm assuming is enough to satisfy any SEC requirements. The limited part of this ETF, if you like, is due to SEC Rule 144A. That means they can only offer the securities within this ETF, if you like, to qualified investors, specialized institutions, not retail investors, so banks, hedge funds, etc., not retail investors. That appears to be the catalyst. There was also a headline out that a well-known hedge fund manager in the UK was looking to start up a crypto fund somewhere in the region of $1 billion worth. Again, that's kind of a positive. We'll see, if that comes to fruition. But a decent rally for Bitcoin just when it really started to look like we might be testing low. So as the USD gets going, equity futures are higher, largely due to the improvement in the Hong Kong situation, with Dow Jones futures showing a gain of 200 points at the open. European equities also all moving higher, and the Hang Seng itself actually ended up closing up a very credible 4% on the day. On the FX side, euro dollar began the day 109.75 and rallied up as high as 110.20 on the back of some stronger than expected European PMI data, as well as a general short squeeze after yesterday's weaker than expected US manufacturing PMI data. However, the original low for the year, 110.27, remains intact before the USD gets going. Gold begins the day back down to 1535, having originally been up to high 1550. No great reason for that, but I think probably just a slight rally in US rates to begin the day, probably enough to see gold come off. So the USD gets going, trade data comes out, and the trade balance narrows to $54 billion in the US, which is certainly a narrowing of the trade gap, which obviously you would kind of expect, I think, with in the current situation, but not quite as good as expected. However, very little effect on the FX markets or equity markets. And what it seemed really for the rest of the day was fairly quiet. Euro did finally break the aforementioned 110.27 level, but only sort of drifted higher to 110.38 You might have expected a few stop losses above that level and a sharp spike higher, but no real momentum, as the majority of the work moving higher had really been done sort of during the European session and a very early US session. And despite all the happenings in the UK, sterling ended up running as high as 122.30, so a good 270 points off the low. The thinking being that not allowing a no-deal Brexit is actually a positive for the UK economy, regardless of the political fallout. Equities in the US remained very stable all day long. The Dow Jones was either side of 200 points for most of the day and ended up closing pretty much on its highs, plus 227 points. The S&P and NASDAQ also had similar percentage gains. The big mover really was gold. Had a really strong rally off that 1535 low up to a high of 1558 in the US as the 10-year yield dropped back down to 1.46%. Fair to say, expect more of the same ahead as Brexit and trade wars dominate the headlines, hopefully for the people of Hong Kong. The situation has improved and will no longer be a concern for markets. So moving quickly on to a technical piece here. Going to keep the crypto crowd happy. Want to look at BTC here, Bitcoin, on a 2-hour chart. I've been saying for the last 6 weeks or so, really, how resilient Bitcoin has been. Every time we dip below 10,000, I'm just bringing up the 10,000 level. For those of you who are watching the video right now, you can see here, we've gone up and down through that line quite a large number of times. And, when we have been below, we've bounced fairly quickly. I must admit, I thought this time we looked pretty heavy, and I thought we were going to test the major support at just above 9,000. But I was proved wrong with the moves over the weekend and the news about the limited ETF. So we bounced yet again. What I want to look at here, we kind of know what we're looking at on the downside in terms of support. To the top side, initial resistance just ahead of 11,000, as you can see from this line here, was a previous high. And then we have, we go back to the high in June all the way up towards 13,900, and then several highs here. I've drawn this blue line here. The reason I've drawn this is because there is sort of a downtrend, if you like, off the highs. But what concerns me a little bit is it does resemble the pattern we saw last year with Bitcoin coming off the 20,000 level. We ended up with a whole bunch of series of lower highs being made on the way down. And that's kind of what we're seeing here. We made a high, and then we're making a lower high. We're making a lower high here. We've made a lower high here. We don't want to make a lower high here. So I'd like to see this broken first of all, and then this trend line broken as well. I think that'll give us a little bit of confidence for a move higher. So do keep an eye on those particular levels. And we've seen a $1,400-$1,500 rally in the space of 3 days. As we know with crypto, it can move quick. So nothing to suggest you can't get another $1,500 in another 3 days. So that's why I wanted to highlight these levels, so keep an eye on them. And that pretty much sums it up for today. So I hope you all had a good day, and wish you the very best of luck for the rest of the week. And I will speak to you again tomorrow. Cheers.